Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 24th of June. It's official. Britons decided that they no longer want their nation as a member of the European Union. Given that until yesterday bookmakers' odds as well as the movements in sterling both suggested a win for the Remain camp, the shift in market sentiment was extremely sudden. This only signals the beginning of a period marked by uncertainty, which is likely to lead to a prolonged environment of risk aversion. This is already evident by sharp movements in most currency pairs and asset classes. Cable collapsed to levels last seen in 1985, while the euro plunged too, but to a lesser degree than the pound. We expect both currencies to continue trading lower in the foreseeable future, as the future of both the UK and the EU comes under question. Safe havens such as the yen and gold surged and could continue rising in the near term as investors flick to safe haven assets. The Nikkei 225 closed 7.9% down, while UK and European stocks indices opened with negative gaps. Given that both Scotland and Northern Ireland overwhelmingly voted to remain in the Union, will this trigger more independence referendums? Considering that the First Minister of Scotland has already instructed officials to draw up plans for a second referendum if Scotland wants to face the prospect of leaving the EU against the will of its voters, we believe that this could indeed be on the cards. Even Northern Ireland could seek a referendum, as the border between Northern Ireland and the Republic of Ireland will become an EU external border, suggesting that trade between the two states may require the imposition of tariffs. These questions could heighten uncertainty over the UK's outlook and thereby lead to lower investment, consumption, and potentially slower inflows of capital from abroad. As for the EU, we expect this Brexit to generate concerns regarding the future of and sustainability of the European project. We could see increased support for populist anti-EU movements all across the Union, which may raise speculation that more countries could hold independence referendums further down the road. What about monetary policy? The lights will now fall on the Bank of England and its potential policy response. Officials have stated that in a leave scenario, the Bank of England would likely face a trade-off between curbing high inflation on the one hand and boosting faltering growth and employment on the other. We expect the bank to focus more on supporting growth and employment in the near term and perhaps be tolerant of a short period of high inflation. As a result, we believe that the possibility for a rate cut has increased in the aftermath of the vote. We expect the ECB to signal that it stands ready to add more liquidity, potentially by expanding its QE program, as was hinted by various ECB officials in previous days. The likelihood for further Bank of Japan easing in the near term has risen substantially as well, in our view. We expect the bank to ease further at its July meeting, partly as a response to negative inflation and a stronger yen. Until then, though, further strengthening of the yen due to its safe haven status could prompt direct intervention in the FX market in order to curb yen gains. This also changes our expectations for the Fed's pace of normalization. In our view, July is out of the question now, as the FOMC is likely to reiterate its concerns about global developments. Furthermore, the likelihood for a September hike that was previously our base case scenario has now declined significantly, and the risks have shifted towards a later hike. Finally, if we see Euro-Swiss franc dropping further, we expect the SNB to step in and stabilize the pair. For more information, including technical analysis, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.